Hey guys, this is Mark Shawson, the Pattern Trader. I just picked up a review off our review website that I thought I'd like to share with you. It's from Kenny, and Kenny says, I'd like to start off this review by stating I am not an affiliate of the Pattern Trader. No one has paid me to do this review. It's something I want to leave so to help protect others from scammers so they can learn to trade in a friendly environment. I'm leaving this review, so hopefully someone out there witnesses Mark reading it. If anyone is contemplating getting into trading and looking for someone to trust, Mark Shawson of the Pattern Trader is the person you are looking for. Like many other members of the Pattern Trader, I've been scammed by companies out there. After scrolling around the internet, I actually came across the Pattern Trader, and the rest, as they say, is history. Welcoming, friendly, no pressure, and just amazing at what he does, teaching others. Well done, Mark, and your team at the Pattern Trader. Looking forward to many more years learning from you. Hail, Mark. So, Kenny, can't thank you enough for those kind words. Means a lot to me, and I'm sure hopefully it will mean a lot for others who review it. So, thanks a ton for leaving that. So, I think what I wanted to share with you today is that we're seeing a lot of paradigm shifts in the market. Consistent with the background of this worldwide global pandemic. We're seeing certain structural changes in many markets, and perhaps we'll only learn of certain permutations, going forward. But one of the most fundamental shifts that I'm seeing is the relationship between what I will call the pan-European currencies and the pan-Asian currencies, and specifically, I'm looking at the relationship of the euro and the British pound with the Australian dollar and the New Zealand dollar. So for the past 3 years, I've been saying New Zealand dollar and Australian dollar, have been the weakest currencies on the board. And in the main, we've seen that the Australian dollar went from 95 cents in 2015 to almost 50 cents during the crash in February and March. We had a similar crash in the New Zealand dollar. But now I'm starting to see a change, and I think there's going to be a lot of money, made on the turn. And I think this is really where I pride myself. A lot of people say you can't really pick tops or bottoms in the market. I don't really feel that's true. To my mind, the market starts establishing certain patterns, and then I've learned to dig within the patterns to get on these trades early and understand the price action. One of those trades was in the pound versus Australian dollar. Where I pointed out to our members that I thought we were turning from this fundamental relationship with the British pound versus the Australian dollar, which has been going up for the last 3 or 4 years. And about last month, I said, look, I think it's all over. I think you're going to see a major reversal in the pound versus Australian dollar. I'm going to show you on the charts in just a moment what I was looking at. I started, telling our members to start shorting pound versus Australian dollar above 201. And right now it's trading at 192, almost 1,000 pips lower in just a few weeks. And I think you're going to see these other pairs starting to crack. The pound versus New Zealand dollar. This is one of the pairs that I've been advising our members to basically look at the long side over the last 3 years. And I think we're going to see a dramatic turn in the relationship of the pound versus New Zealand dollar. And that looks like it's going to head lower. And similarly, the euro versus the Australian dollar, and the euro versus the New Zealand dollar. I think there are fundamental and technical shifts that are occurring in those pairs and likely to see a reversal. And I think there's going to be a lot of money to be made on the downside as these things reverse direction. So now I'm going to go to the charts and show you what I'm looking at in the relationship between the euro, the British pound versus the Australian dollar and the New Zealand dollar. Okay, before I head to my analysis on the real-time charts, I just want to direct your attention to an email that was sent out about 3 weeks ago, which basically sounded the same theme as I just spoke about a moment ago, where I said 3 weeks ago there appears to be a fundamental and technical shift in the relationship of the euro and the British pound trading pairs toward namely the New Zealand and Australian trading pairs. And I wanted to say for the past few years I've been a proponent of the bullish price patterns in British pound versus Australian dollar and British pound versus New Zealand dollar. However, recent patterns in price action suggest there will be a big turn lower in these trading pairs. And again, I'll direct your attention to the British pound versus Australian dollar, where 3 weeks ago I directed our members to sell this trading pair at a price level just a hair under 201, and right now we're trading around 192, about 900 pips lower than when this email went out. And I was looking at a serious turn by virtue of the ascending broadening top and the double top price pattern, which I will discuss in just a moment. And I went on to say British pound versus Australian dollar appears to be in the process of forming a double top right at the apex of an ascending broadening bear price pattern. And I said penetration below the 196 price level would confirm this broadening price pattern. So this was 3 weeks ago, and we are 900 pips below where this email was sent out. So now I'm looking at the real-time live chart of the British pound versus the Australian dollar. This is a daily chart where each one of these bars represents one 24-hour session. And this was the pattern, the guiding pattern that I was looking at in my email 3 weeks ago, where you had this ascending broadening. And again, you'll notice how cleanly these highs meet along this line. And then you'll see similarly how we have a line that crosses a number of lows on the bottom channel. And you can see this was the breakout area. I said once this cracks below 196, this ascending broadening pattern would be confirmed. And what I mean by ascending broadening is that you can see that this pattern begins life very narrow and then ends up very wide at the top. And that's why we call it an ascending and broadening price pattern. Now, the implications of an ascending broadening pattern is that it is tantamount to a reversal pattern, meaning that wherein leading up to this pattern we had a uptrending market. In that this is a reversal pattern, it means that we will have necessarily a reversal of prices once this pattern has been confirmed. And you can see that it was confirmed by cracking this level a hair under 196. Now, if you wanted further confirmation, I was also looking at this double top. Right at the 206 to 208 trading area, you can see these two peaks. And this is exactly where I advised our members to go short. Right a hair under 201, right below these two inside trading bars. And what I mean by an inside trading bar is you can see that these two narrow range bars fit neatly within the range of that session 3 days earlier. And so the ascending broadening pattern, the double top price pattern, the inside bars, all told me that we were going to get a huge turn in this market. And now when we look at this pattern from a distance, we can see very cleanly this large M top that has been formed. And recently we broke below the low right here of the neckline, which is simply a line that connects this M top or double top price pattern. So you have the ascending broadening pattern, you have the double top pattern, you have the crack below the neckline, you have a crack below the ascending broadening. All indicates that this thing is going to go lower. Now, it wouldn't surprise me if we had a bit of a reaction back up to this breakout area and then another attempt to go lower. But whether how this goes lower is somewhat uncertain at this time. But what we can understand, we can actually measure the implications of this ascending broadening formation. And this is where it's likely to go, right to the breakout of the pattern, around 176 to 178. So to my mind, there's a lot of room to fall as this looks like it's going to reverse the relationship of the last 3-4 years, meaning that the pound versus Australian dollar over the last 3-4 years was heading higher, and now over time it looks like it's going to head lower. This is a chart of the euro versus the New Zealand dollar. This is a daily chart, and as you can see, for the past couple of years, the euro versus the New Zealand dollar head higher until it hit this 2000 level. And then in what looks like an exhaustion or blow-off top, as we hit this 2000 level, we settled right back into the range, and now we're heading toward levels where we saw the long-term breakout right around the 177 area. And anything below this area will then suggest what I call a bear trap. I'm sorry, it's a bull. In addition to the exhaustion and bear trap, we can also see an emerging head and shoulders bear price pattern in the euro versus the New Zealand dollar. And the head and shoulders looks just like it sounds. It looks like a man or woman's. This would be the left shoulder. The peak would be the head, and that would be the right shoulder. And we have what's called a head and shoulders bear price pattern. And you can see that the neckline was recently penetrated of this bear price pattern. We recently had this mini double top right here, and now we're ready to crack below the secondary neckline around the 178 area. This 178 area also coincides with the breakout area, and any penetration below here, to my mind, will open up levels much lower in euro versus New Zealand dollar. Now, it might not happen tomorrow, but I do believe over the course of the next few days, few weeks, and few months, the trajectory of euro versus New Zealand dollar will head lower. So again, this is just two examples how the British pound and the euro were heading higher versus the Australian dollar and New Zealand dollar, and now those relationships are in the process of reversing. So I hope you found this useful. If you would like to understand my process, if you would like to understand how I assess technical price patterns, if you'd like to understand how I look at trades and set up trades on a weekly basis, then I would suggest you download my weekly video report. Comes out every Sunday before the market opens. It's a very comprehensive overview of the markets. There's always a 20 or 30-minute video in there that I go through most of the markets and explain comprehensively what I'm looking at on a price basis. And if you like this kind of information, I would suggest you check it out. And you can do so for the grand price of any price you want to pay. So, anything you want to pay for this thing, we'll make it available to you. So with that said, I look forward to seeing you on the next weekly video report. And until next time, I wish you a healthy and prosperous trading day.